Hello and welcome to another session of Informally Formal. I'm back again with one of my favorites, Rahil Ahmed. I have introduced him previously. He is smart, intelligent, well-spoken, knowledgeable, a mover and shaker in the digital space in Bangladesh. He was the managing director of Prime Bank, has had various high-level management stints in banks in the Middle East, led corporate banking with Standard Chartered here in Bangladesh. Now the new CEO of Nogod. A very warm welcome to you, Rahil. It's good to have you.
Thank you so much, Akber. It's always a pleasure.
All right, wonderful. So today we're going to be talking about opportunities and challenges in the financial sector overall. But of course, we are also going to be talking about the mobile financial space that you head one of the major platforms now through Nogod. So my first question to you, Rahil, is the overall financial sector, the space. In any economy, financial sector is very, very important to take the economy forward. Goes without saying. Now, many of us here in Bangladesh have concerns about the banking industry. I would say the volume, the amount of non-performing loans, and some borrowers have become too large, so banks cannot allow them to fail. If you remember from 2008 financial crisis in America, some of the banks, the term came too large to fail from a lender's perspective, but that is also true when you think in terms of borrowers. If you allow some borrowers to get so large, then the entire system comes to risk. So anyway, I can go on, but I would leave the floor to you, Rahil. Your views, especially starting with the banking sector, since you are a veteran of the banking sector. Please, over to you.
Thank you, Akber. Let's first talk about the challenges that the Bangladesh financial industry or banking industry has. As you have already touched on the bullseye, the non-performing loan, the much talked about challenge or the limitation or the bottleneck, whichever name we want to give, the issue or the elephant in the room is non-performing loan. But at the same time, I just don't want to brand the Bangladesh banking industry very negatively because the Bangladesh banking industry, we have to just step back a little. If we just go back, say, roughly about 40 years from now, as you know that when the country became independent, since independence till about early 80s, the Bangladesh banking industry was predominated or primarily dominated by the state-owned banks only. It was only during the early 80s that the private commercial banks came into play, just a handful, few of them. Now, the state-owned banks, with full due respect to them, didn't do enough, I would say, to create a solid foundation. The reason why I'm saying it, that the private commercial banks, as we speak, caters almost 80% of the need of the development that we are seeing over the last 10, 20 years. Especially in last 12 years, the economic revolution that we have witnessed, the majority of it, if not 80% or more of it, has been catered or carried over by the private commercial banks of the country. And one unique thing we can't forget, which is very unique in Bangladesh, especially in banking. I'll just take one example. A private commercial bank in Bangladesh has to cater a short-term requirement of the customers, the corporate customers per se, the long-term, medium-term, be it service sector, be it venture capitalism, just name it. Anything and everything has to be done by private commercial banks of the country. We don't have a matured bond market. We don't have a specialized financial institution. We have it by name. When there is a need for building a bridge or an airport or a power plant, people come to private commercial banks. So we are not supposed to lend more than a year or 2 years, whereas we are not only lending the short-term working cap, but also doing very long-term 10, 15 years loans as well. So that kind of created a lot of pressure on the shoulders of the private commercial bank. And naturally, as you were talking about too big to fail, I mean, if you look at the economic revolution or the private sector growth that has happened over the last 10, 12 years, obviously there is a handful, because most of them are first generation business people. So they needed to grow on a very geometric progression rather. And they only had the private commercial banks to support them. So that has been one of the primary reasons for hand-in-hand growth, both in terms of the business as well as in the banks. Now, the biggest challenge that we have in my eyes, let alone the non-performing loan, is the legacy process that we have in most of the banks. I have worked in one of the very large banks in the country. The biggest challenge that I faced in my immediate last role was unwinding the processes of 22, 23, 24 years. I mean, that was a 20 odd number of years old bank. And when I'm talking about processes, in last time when we spoke, we talked about digital transformation. So financial institutions or banks can't be very slow in that digital transformation. Now, when you need to transform digitally, you can only transform your user experience and just give a facade to it. But you need to transform end-to-end all your processes to be truly digital and then drive the digital behavior of your customer. When you are a 20 years old bank and you have your legacy process, and when I'm talking about infra, I'm talking not only about processes, but also the people and the platform. So unwinding such an old platform or infra is the biggest challenge for any of the banks that we name in the country as we speak.
I will go and ask you a couple of very poignant questions. One, is in a country the size of Bangladesh, why do we have so many banks? Just a quick answer.
We all know that majority of the reason was the political rationale behind it. But at the same time, I don't fully blame. If all these banks were functioning properly and all these banks were doing justice to their name, it could have been a very healthy competitive market out there as well.
Since you are the CEO of Nogod, you guys instituted and started and pioneered the star 167 hash. Is that right?
Yes.
Okay. So that is your digital KYC. Why can't the banks use it? Very quickly, tell me.
Banks could have actually innovated something like this before, or even if they don't have that innovation, the KYC part, once it is done, because in any case, through the Asian banking, the KYC process has been simplified. So if you are expanding through your agent banking, the micro SMEs, if you're onboarding them, central bank has simplified those processes anyways. So all you need to do is to gather or leverage on the data as much as possible. Now, you don't have all the data by yourself. So you need to collaborate with FMCGs, with telcos who are sitting on pile of data, and they're open today. And today the banking is all about collaboration. The problem is with the mindset. The banks, or most of the banks, I would say, they want to do things just by themselves, but that time is gone. Now you just can't do everything by yourself. You have to collaborate. You have to collaborate with people like us as well. And we are also sitting on data, because today we have 40 million data with us, and people who are our active users, how much payment they're making, how much money they're sending, how much utility payment they're making, how much of top up they're doing in cell phones, how many merchant payments they're doing. We have all this data, and based on that data behavior, a bank can finance, riding on us. So these are the things what needs to be done more and more.
Rahel, let us now real quickly switch gears. What do you think is the effect of the pandemic on the banking sector? What do you suppose it would be?
The pandemic has been, I look at it both positively and negatively, both ways. Obviously, the positive is that the acceleration with regards to the digital behavior The customers who were not used to do things digitally, they are now being forced to do things digitally, which is good for the banks to lower their costs and offer the digital offerings and get the customers more used to the digital usage. But the negative side of it is obviously the non-performing loan is something which will have a big question mark on it, because as we know that the whole of 2020, the classification rule has been, kind of the regulatory intervention kept it at the bay. Now, even when it was about to be lifted, we are seeing or witnessing the second wave of COVID hitting us. So we don't know how long it's going to be there. So it's going to be a question how long this COVID second wave is going to sustain and how and when businesses are going to get out of it. Because the biggest impacted area is not necessarily the large businesses. The biggest impacted area is the micro, small, medium enterprises. They are the backbone of the economy. They're the marginal ones who get so impacted with any kind of lockdown, shutdown, or economic slowdown that we witness. So that is going to be having a long-lasting impact, at least for next couple of years in the banking industry.
We're at the tail end, Rahel. So, I cannot finish this session without asking you, why have the banks not been able to get into the mobile financial services? They have some of them have the money, the heft and everything. Why weren't they able to get into it? Your thoughts?
I have been in this space of business for the last 2 months now, just over 2 months. And one thing I have learned and one thing I have felt and understood absolutely to the point is that it's not a banker's mind or a banker's hat to run this business. It's a total different business. It looks like that you're dealing in the financial services very same, but it's not. It's a distribution business. You run it with a totally different mindset. So a bank with its formal structure and the way bankers usually think of it, it is not necessarily to be run in the same manner. And if you have seen the examples of the last 10 years, as I was mentioning earlier as well, that roughly about 20 banks were given licenses to run MFS business. Only, as you named, Bkash, who was the maiden player, could succeed. And mind you, they are run by BRAC Bank with 51% shareholding, but they're not run by BRAC Bank themselves. It's a separate management who runs the business. So you have to run it separately. You're sitting inside the bank and running MFS business is not possible. It's a pure distribution business that you're running, and that is not necessarily like a bank's distribution business, more like an FMCG distribution business that you're running.
In conclusion, Rahel, what I would want to ask you, look at the space in China and how through Alipay and other such players, they have come of age to the point where they're now saying the legacy credit card companies like MasterCard and Visa could disappear because there is just absolutely some of the places in China, they don't even accept that. Your views on that?
The payment space as we speak, in terms of the conventional modalities, they need to transform very rapidly. And as you rightly pointed out that all these Alipays and WeChats and WePays, they have actually thrown a big challenge to the face of the conventional masterminds like MasterCard, Visa Card and others. The customers are going to be more and more reliant on the virtual form of it. I mean, carrying a physical card in a separate wallet is something which is already extinct in many of the parts of the world geography. And within, say, next 3 to 5 years, that would possibly be something in ancient form. So as we know that our life is now kind of circling around the cell phone that we carry, and that is going to be anything and everything embedded. The whole lifestyle of a person is going to be embedded through the cell phone.
Right, absolutely. As we move deeper and deeper into the digital space, Rahel, the obvious question that comes to mind is data security. What have you guys thought about blockchain and its application in whatever it is that you do?
As we speak, the technology that we are using is very well-renowned one. Currently we're using the Korean technology, but at the same time we are kind of upgrading ourselves very soon, inshallah. And we are always going to be embracing the better technology, and the better technology definitely comes as a package with better security. So both in terms of data privacy as well as data security, we are never going to be compromising on that front, because we're dealing with people, we're dealing with money. So that is the first and foremost criteria that we bear in mind in terms of doing business.
Okay, I guess with that, we'll have to wrap it up. Rahel, what a pleasure it's been. Always a pleasure. I would like to thank you, and with the request to have you back many more times, because I'm sure, as you continue your journey with Nogod, we'd like to keep tabs on you and find out what latest and greatest things that you're doing over there, which I'm sure we'll hear about in the coming days and months. Rahel, thank you so very much for joining us.
Thank you so much for having me, and thank you for sharing my thoughts.
Wonderful. Ladies and gentlemen, with that, we bring it to a wrap. Please stay home, stay safe, and I'll catch you in the next session. Bye-bye.